From our Stars and Dogs segment, it's time for this week's Dog.
Tesla symbol TSLA on the NASDAQ designs, develops, manufactures, leases, and sells electric vehicles and energy generation and storage systems in the US. The company operates in its two segments, automotive, energy generation, and storage. Tesla did see a brutal 2020-22, and it has not stopped, at least for the first day of trading in 2022, falling 12% yesterday. It is a bit up today at the time of recording, and I think it was a few percent, so a bit better, but it's still absolutely just been hammered over the past month, down 41%. And at the time of when I was writing this, it was a 108 with a market cap of $339 billion. Tesla's drop over the past year, as well as specifically the last month or two, can be attributed to, I found, three factors: macroeconomics, weakening delivery performance, and of course, the ever so visible CEO Elon Musk's actions. First, let's go over the macro conditions, which normally I wouldn't really touch on these for an individual stocks, but I'm specifically highlighting these because the CEO Elon Musk highlighted them and he attributed the high interest rates. So when high interest rates are starting to shift from the low to the high, you'll start to see valuations go down. This is due to a somewhat technical factor. When you're comparing two things, let's do a bond versus a stock. If you can get, let's say now 4% from a bond, when before you're getting effectively maybe 1% from a treasury at best for quite a while, you're going to shift to the bonds because it's lower risk naturally. So you have to get a higher return from the equity. So in Tesla's case, since a lot of its growth was down the line with its high valuations when it was at 50, 60 PE or even higher at times, now all this future growth has to be discounted at that higher rate. So we add in that higher discount rate. Or you can just think of it as an interest rate, and it will create a lower valuation. This is what Elon Musk highlighted why the stock has dropped so much. But even with that, it's partially true. It is true, but that affects every single financial asset, not just stocks, not just bonds. It affects real estate. It affects even commodity futures. Everything interest rates is embedded in. So it's not just the dominant reason. It is really overvaluing how much interest rates affected his stock. But something he can't control. Whether you agree with him or not, his actions has affected the stock. His shenanigans with Twitter over the first 3 quarters of 2022 before he bought it, and then now he's offloaded an additional 20 million shares at mid-December, which is about 5% of his holdings, but he does hold a significant amount, which has further pressured the stock downwards. So his actions, as well as the views of people, so he's sold stocks, he's made obviously a ton of political opinions, which I'm not going to go into too much, but it has really put a dampening on many investors and as well as customers. So that's operational as well as financial side. Then third, perhaps the most important factor for the company itself is it is seeing a slowdown in operations. So just yesterday, the Q4 22 delivery report came out below expectations for both analysts as well as Tesla itself. Productions did grow dramatically, 47% year over year. But when you're pricing in these high growth rates, if it comes in even a bit short, investors start to get a bit skeptical, especially with what's been going on in the broader economic conditions in the market. And as well, production has outpaced delivery. So you may be wondering, why is that such a big deal? It means that they're starting to build up inventory, which means demand can be lower. That's not an absolute, but it does generally hint at it. So while the full earnings report is to be released on January 25th, which could result in another spike up or down, we will see. I think it's going to be quite volatile. It is now our dog of the week for now. And I'll open up to you guys if you got any comments.
Yeah, well, there's a few things. One thing I want to mention is that Tesla was one of the more highly valued stocks in 2021. And now if I'm going to look at analyst estimates, which, you really have to take these with a grain of salt, but analysts are estimating, I think, about $4 in earnings per share for the current year. And then for that to increase to $5.30 or almost $5.30 for next year. So doing the math on that, you're looking at about 21 times next year's expected earnings. Now, I expect these
ratcheted down probably.
They're going to be revised downwards almost certainly. I mean, analysts are very there's always some stickiness to revising the estimate downward because you're admitting that you were wrong in the first place, and it's just human nature. So I would expect those, but certainly, I mean, you're seeing a complete revaluation of the stock, right? One thing, and yeah, another thing is just the topic of Elon Musk. I mean, it really does seem over the last year he's really politicized his brand, which I don't think is a good idea for a CEO because you're especially in the United States. Now it's a global market for Teslas. But especially in the United States, when you politicize your brand, you're essentially turning away, potentially 50% of your customers either way, right? So, generally speaking, I don't think that it's a great idea. And you would think as well, with Tesla being an electric car company, there's the climate change aspect to it. You probably have more customers that tend to be from the left, I would think, in the United States. So, for that reason, some CEOs, I think the smart ones, just don't make their company about their personality. They make it about their product more. And then there's just a lot of things with how much of a CEO can he really be of Tesla when he's spending, it seems to be like most of his time on Twitter. So yeah, I can't imagine, with the economy potentially continuing to slow, rates remaining high, maybe they're not going to continue to go up. Maybe they'll even come down towards the end of the year. But still remaining high, and then a lot of competition coming online for electric vehicles. I wouldn't be necessarily in a hurry to jump in on Tesla stock right now. That's for sure. Even though the valuation does look a lot better than it was.
Yeah, I mean, I think it's ironic that social media, I think it's underpublicized how much it helped Elon Musk build Tesla. Like without having the expense of marketing, being able to have his massive following on there, just tweet out something using Twitter, for example, or put it out on another social platform and have hundreds of millions of, even billion people looking at that tweet without having to pay a single dime. It sets them apart from, Ford has to spend millions, billions for a Super Bowl ad to launch a product, for example, or something like that. And Tesla can tweet out something and it gets the same effect. And then it had a cult-like following of people who are following this cult of personality, right? And if you start to eat away at that, and he's eating away at that via his actions on Twitter, which is from social media. So it's ironic that now that could be, that's what's really sinking the stock. Valuations were what was crazy though, too, on the stock. And, you're starting to maybe get into a territory where they're starting to look better if you believe the growth going forward. But now do they face more competition? Their balance sheet looks a hell of a lot better than their competition, though. I would say that too. So we got to take that into fact. But yeah,
I mean, as more car companies come out with other vehicles that, Tesla had the cool factor. Now because you didn't see many Teslas around. So you'd see a Tesla and it'd be like, oh my God, that person has a Tesla. It was a sign of status. Now you see more Teslas around. Still a sign of status, I would say, but less so. But now you're going to see, BMW, some other electric vehicles. There's just going to be a lot more competition. So, CEO branding completely aside, I think that's probably would have been a major risk to Tesla anyways.
But there are people, say in the last 6 months to year, maybe in the last 3 months more accelerating, that I don't want to own, saying these statements. I don't want to own Tesla because I don't like Elon Musk. And that wasn't there 6 months to a year ago. There was a few.
His brand was a positive, I'd say, 1 to 2 years ago.
And it probably still is overall, but you hurt that, right? And that's a factor. It is a factor because if you start to get like in cars, like if people start comparing Tesla's technology to, an electric car from a competitor, and it's like then you need brand, right? And if your brand is getting tarnished, there is a hurt there to the overall.
Personally, I'd rather invest in a company where the CEO doesn't make it about his own personality.
Yeah.
For the most part, I just think that that's just a more rational perspective because it should be more about the product.
If we look at the fundamentals, and if Tesla continues to grow at similar to the rate that it does now, and you can buy it for the price that you can, and it has a solid balance sheet, it is interesting. But you put that into doubt with the items we're going over right now. So that's investing. It wouldn't be this cheap.
Certainly if it starts hitting next year's targets
on a relative
the fundamentals
basis to where
look
it was,
good, but it's still at around $100, then yeah, it starts to look interesting at that point. But we'll
Yeah.
see.
Yeah, for sure. Interesting. And we'll continue to monitor that throughout the year for sure. Now,